Welcome to Rapid Fire Crypto Rundown. Today we're breaking down why the market's just tanked. Let's dive in. Imagine you're just, strolling through the market, everything's looking vibrant, prices are healthy, then bam, everybody faints. That's kind of what just happened in crypto.
Yeah, it is a great analogy. That's a really good one because it was so sudden. The Milk Road newsletter from December 19th, they point out that Bitcoin was cruising at $104,000 that morning, then whoosh, down it went.
So what exactly caused everyone to, hit the floor? Was it just the Fed's rate cut, which we all knew was coming?
It was more like a 1-2 punch. The 0.25% cut itself wasn't the shocker. It was Fed Chair Jerome Powell's little side commentary that really threw people off.
Okay, spill the tea. What did Powell say to cause such a stir?
He basically rained on everyone's parade. First, he announced only 2 rate cuts in 2025 instead of the anticipated 3. Then he bumped the target inflation rate up to 2.5%, higher than the previous 2.1% goal.
So instead of a gentle slowdown, it's more like the Fed's slamming on the brakes.
Exactly, and this isn't just about stocks. It ripples out to crypto, too. Think of it like this. Higher loan costs last longer. People spend less. And suddenly that risky crypto investment doesn't seem so appealing.
Plus, it's like the Fed's admitting they might not have inflation under control as much as they'd hoped.
Right, and that makes investors nervous. Remember, the markets are driven by sentiment as much as actual economics. This is where the theater analogy comes in. By saying they'll cut less, the Fed encourages selling, cools the market, and buys themselves time.
Okay, I'm starting to see how this all connects. But hold on. If everyone already expected a pause on rate cuts in January, and the Fed doesn't meet in February, doesn't that mean things could change again by March?
Absolutely. The Milk Road even points out that the Fed might be singing a completely different tune by then. It's like they're trying to spook us into behaving even if they might change their minds later.
So the takeaway for our listeners is, don't panic just because the markets took a dip today. It might be a temporary scare tactic from the Fed.
Exactly. It's important to look beyond the headlines and understand the motivations behind these moves. They really do have to play this game. We're all trying to figure out the rules as we go. But let's shift gears a bit and talk about a trend that's really heating up despite this market chill. Centralized exchanges launching their own Layer 2s. Milk Road highlights this as a major development.
Yeah, it seems almost counterintuitive. Why would these centralized giants want to decentralize? Isn't that biting the hand that feeds them?
It might seem that way on the surface, but it makes sense when you consider their business model. These exchanges thrive on volume, right? More users, more transactions, more fees. But they're also facing a growing tangle of regulations.
So by launching their own Layer 2s, they can tap into a global pool of users and developers without getting bogged down by regulations in every single jurisdiction.
Precisely. It's like building a bridge to a whole new world of possibilities without having to navigate all the bureaucratic checkpoints along the way. And each transaction on their L2, charging another fee for the exchange.
So they're hedging their bets, essentially, recognizing that the future of crypto might be less about these centralized behemoths and more about these decentralized ecosystems.
Exactly. They want to be part of that future, even if it means disrupting their own current dominance. And let's not forget the success of Coinbase's base L2. That's likely a huge motivator for others to jump on the bandwagon.
Yeah, it's like a domino effect. One exchange sees the potential, and others scramble to catch up. What does this mean for the average investor, though? Should we be rushing to use these exchange-backed Layer 2s?
I don't think it's necessarily about picking winners and losers in the Layer 2 race. What's important is understanding the broader trend towards scalability and decentralization. As always, do your research before diving in.
Speaking of exciting new developments, Milk Road also mentions the resurgence of airdrops. I thought those were a relic of the early crypto days.
They've definitely made a comeback, especially with the buzz around Layer 2s and other emerging blockchain ecosystems. Airdrops are a clever way for these projects to bootstrap themselves, distribute tokens, and build a community.
Yeah, it's like a free taste test to get people hooked on the main course. But it's not just about grabbing free crypto, is it? There's a governance aspect too, right?
You're right. Airdrops can help distribute governance power and ensure these networks remain decentralized. Milk Road even highlights a specific airdrop from Lisk, a major player on the Optimism superchain. They're running a 4-month campaign where users can earn NLSK tokens by completing tasks.
So it's like a gamified way to get people engaged with the platform. But Milk Road also cautions against scams, right?
Always. With the resurgence of airdrops, there are bound to be some bad apples trying to take advantage. Double-check those links.
Yeah.
And never, ever give away your private keys.
Solid advice. Okay, so we've got centralized exchanges embracing decentralization, layer 2s taking off, and airdrops making a comeback. What else did Milk Road serve up in today's newsletter?
Well, they also highlighted some interesting moves in the Bitcoin mining space. Hut 8, one of the biggest miners out there, just scooped up $100 million worth of Bitcoin.
Wow, that's a bold move, especially with the market taking a dip today. Is this a sign of confidence, or are they just crazy?
Haha. I think it's a bit of both. They're clearly bullish on Bitcoin's long-term potential, but it's also a strategic move to bolster their reserves and strengthen their balance sheet. Plus, this purchase brings Hut 8's total Bitcoin holdings to over $1 billion.
Talk about putting your money where your mouth is. This also feeds into the growing trend of companies adding Bitcoin to their treasury.
Exactly. It's becoming more mainstream for companies to diversify their holdings with Bitcoin, which just further legitimizes it as an asset class.
So we've covered layer 2s, airdrops, and even some Bitcoin mining action. What else is on the menu for this Milk Road deep dive?
Let's talk about decentralized finance, or DeFi for short. Milk Road pointed out an interesting development: the integration of security measures like the Forta firewall into platforms like Plume.
Okay, break that down for me. What's Forta, and why is this integration significant?
Think of Forta as a super vigilant bodyguard for your crypto assets. It's a decentralized security network that constantly monitors smart contracts and DeFi protocols, looking for any suspicious activity or potential vulnerabilities.
And Plume is one of those DeFi platforms where you can earn yield on your crypto.
Right, so by integrating Forta is boosting its security and giving users greater peace of mind. It's like adding an extra layer of protection to your digital vault.
So this is a win for DeFi security, and hopefully will encourage more people to explore these platforms.
Absolutely. As DeFi grows, security becomes even more critical. It's like the Wild West out there, but with more sheriffs coming to town, so to speak.
That's a reassuring thought. This Milk Road deep dive has been a roller coaster ride so far. We've explored so much, but I have a feeling there's still more to unpack.
There is. But I keep coming back to this idea from Milk Road about how much of the market is driven by perception rather than actual economic realities.
It is fascinating, isn't it? We saw how Powell's words alone were enough to trigger a sell-off.
Yeah.
Even though the rate cut itself wasn't unexpected. It's like everyone's reacting to the ghost of rate cuts past, present, and future.
Exactly. So how do we as investors navigate this landscape where sentiment seems to trump everything else?
Yeah, I
think it comes down to focusing on the fundamentals. Don't get swept away by the hype or panic. Instead, look at the underlying technology, the innovation, the long-term potential of the projects you're interested in.
So basically zoom out and remember the bigger picture, instead of getting caught up in the day-to-day noise.
That's a great way to put it. And while this market downturn might feel scary, it also presents some unique opportunities.
Now you're speaking my language. Tell me more about these opportunities.
Okay, well, for one, it could be a chance to accumulate assets at a discount if you believe in a project's long-term value. A dip like this could be a good time to buy.
So it's like a crypto flash sale.
Exactly. But as always, do your research and make sure you're investing in projects with solid fundamentals, not just chasing hype.
And beyond buying opportunities, are there other upsides to this market shakeup?
Absolutely. Downturns often breed innovation. When the pressure is on, people tend to get creative and come up with new solutions. We might see some exciting projects emerge from this period.
It's like shaking up the snow globe and seeing what new patterns form, right? It's not all doom and gloom.
Precisely. And speaking of patterns, I want to circle back to those insightful charts from Milk Road. They really highlighted how interconnected everything is, showing how Bitcoin, the S&P 500, and even the US dollar all reacted to the Fed's announcements.
Yeah, those charts were definitely eye-opening. It's a good reminder that crypto doesn't exist in a vacuum. What happens in the wider financial world definitely ripples out to crypto markets.
Right, and understanding those connections is crucial for making informed decisions, whether it's the Fed's actions, global economic trends, or even just the general mood of the market. It all plays a role.
Well, I feel like we've covered a lot of ground today. From market manipulation to layer 2s, airdrops, and even the philosophical side of investing. Any final words of wisdom for our listeners before we sign off?
Just remember to stay curious, stay informed, and never stop learning. The crypto world is always evolving, and the best way to navigate it is with an open mind and a thirst for knowledge.
And of course, subscribe to Milk Road. It's clearly an invaluable resource for anyone who wants to stay ahead of the curve in this exciting and often wild world of crypto.
Couldn't agree more.
This has been a fantastic deep dive into the latest crypto happenings, and I hope our listeners feel more informed and empowered to make smart decisions, regardless of what the market throws their way.
Until next time.
Stay informed, subscribe to Milk Road, link in the description.